Hello, everybody, and welcome to our program tonight. Thank you for tuning in to Kent District Library streaming programs. We really appreciate it. I'm Kip Odell, Programming Manager at KDL. If you are interested in any of our other programs, we do a lot of streaming programs these days. They are at kdl.org/events, and we're actually only streaming programs. So anything you see in there is going to be a different type of streaming program. And we are doing adult events and different programs about every other week. So there's always something coming up. And so make sure that you check those out. Now tonight we're doing the 10 Tax Tips program from Legal Aid of Western Michigan. And we're very excited to have them. There's a couple things I want to mention, and then I'm going to introduce them and get them going on the very interesting program tonight. So one thing is, if you're following on Facebook or following on YouTube, either way, you can put questions in during the program tonight, and then near the end of the program, we'll start to put those out so that the team here can answer those questions. So go ahead and do those throughout the program, but then we'll just bring them up at the end of the program. Also, we will be archiving this for later. It's going to be a lot of great information here, so you'll be able to find it on YouTube or Kent District Library through the tax season, or a Facebook page through the tax season, so that you can find those as well. So now I'm going to bring up Steve Grum with Legal Aid of Western Michigan, and he's going to take it from there. Hey, Steve.
Hey, Kip. Thanks a lot. I appreciate it. Hi, everybody, and welcome to 10 Tax Tips for Working People and Families. Like Kip said, I'm Steve Grum. I work with Legal Aid of Western Michigan, and we're really happy to partner with the library and also with the Hispanic Center of Western Michigan on tonight's program. So here's what we're going to do over the next hour. Just like the program title says, we're going to go one by one through 10 tips to help people who have questions about filing your tax returns this year. And Kit mentioned if you have questions during the program, you can type those in. We'll try to get through them and get to them at the end of the program. Remember to keep them general and don't include any personal details or information. We're going to refer tonight to a lot of resources that are on the IRS website. Now, we made a listing in a handout of all the links that we're going to talk about tonight. So don't worry about fussing around and trying to Google and find them or write them down. We'll make that all available to you on social media. And you can also just go to our web pages and contact us, and we can send stuff right to you if you can't find it. But we'll definitely have a handout with all the links. And last, we're recording this program, and the Hispanic Center is going to produce a Spanish language version and also translate that handout. This is all going to be available in a few days. The Kent District Library will post it on their Facebook page. We'll post it on our Facebook page. Or again, you can go through our websites and contact us, and we can get things to you. Okay, so let's get into it. And let's start with something obvious. 2020 was at best a crazy year. And for a lot of us, it was a hard year. A lot of people lost work through no fault of your own. Some people switched jobs. Some people found new jobs. A lot of people got unemployment insurance benefits, and some of them for the first time in their lives. And a lot of us, if you remember back to last spring, got those first government stimulus payments. So here's something else that's obvious. Even during normal times, non-pandemic times, income tax, not a lot of fun. We get that. We're going to try to keep things simple tonight, and we're going to focus especially on some of those issues that have come up during the pandemic. So as we move on, just before I introduce our two presenters, I'm going to give you my lawyer fine print, which is that while we're super excited to offer the tips and resources tonight, this isn't legal advice or tax prep advice. We can only do that one-on-one and privately. That's it. That's the end of my lawyer fine print, but I do want you to know that. So let's move on now, and I'll introduce our presenters, Karen and Tom. So Karen Chapkus is Legal Aid's Director of Litigation, and she also oversees our Low-Income Taxpayer Clinic, or our LITC. What's LITC? LITC provides a couple of things. One, education programs like this one for low-income taxpayers and people who speak English as a second language. And then two, LITC can also represent people who have tax problems, which are often called controversies, with the Internal Revenue Service. Tom Toft joins us also. Tom is a staff attorney here at Legal Aid, a tax lawyer, and along with Karen, Tom manages our LITC program. So let me turn things over to Karen, Tom, and we'll get into the tips. Karen, it's tax season. A lot of us haven't thought about taxes in a year, including me. So help us ease into things here with just a quick overview on filing our tax returns this year, and then take us into the tips.
Yes, great. Thanks, Steve. So yes, we are getting into tax return season. Tax returns are generally filed in order to calculate your tax liability, to schedule tax payments if you owe money, or to request a refund if you've had an overpayment of your taxes or you have a credit that you can claim as a refund. For this year, or for the 2020 tax year, those returns are due by April 15th, 2021. Unlike last year, there has not been an extension due to the pandemic. So we do anticipate it's going to be a normal April 15th tax year. You should start to be looking in your mail, in your email, for all of those really important tax documents, things like W-2s, which you might get from your employer to show what your wages were for the year. Form 1099s are also very common. Those 1099s often evidence other income from other sources, such as if you are an independent contractor or money you received from the unemployment agency. You should also have a notice 1444 and a 1444B somewhere in there. And those are going to evidence your economic impact payments, or those stimulus payments that we have been getting because of the COVID-19 pandemic. So now that we sort of grounded ourselves in some of the forms and when these things are due, let's go into our first tip number 1. And that's talking about unemployment insurance. As Steve mentioned, a lot of people have gotten unemployment because of the pandemic. Many folks, for the first time, they've had to work with the unemployment system. So it's really important to know that the unemployment compensation you received is taxable income, just like wages and other income. And it's going to be taxable both by the federal government and by the state of Michigan. So if you did receive any sort of unemployment insurance benefits, you should be receiving a Form 1099-G from the state of Michigan, and that will show the amounts you were paid. It will also show any income tax that was withheld if you elected withholding as a part of your application. Now, you should remember that there were a lot of different and additional programs with unemployment this year, again, because of the pandemic. Things like the Pandemic Unemployment Assistance Program that provided benefits for gig workers and some other workers not covered by our traditional unemployment system. A lot of folks also received that extra $600 a week over the summer. Some folks are starting to get the extra $300 a week beginning at the end of December. All those payments are taxable as unemployment payments. And so you're going to need to claim that on your taxes. And again, that 1099-G is going to be the best place to find the information that you're going to need.
All righty, thanks, Karen. Let's move things along. And as we get into tips 2, 3, and 4, we're going to focus on different kinds of tax credits that might help you with your filing. So Tom, let's start with kind of a weird fact. I mentioned a few minutes ago getting the stimulus payment that I called it last April. And in fact, that was connected to a tax credit. So let's get into that first.
All right, thanks, Steve. So tip number 2 is claiming missed economic impact payments as a tax credit. These are these stimulus payments that we all talk about. Economic impact payments are actually advanced payments for a 2020 tax credit called the Recovery Rebate Credit. This is important. You may have heard, like I said, these payments are stimulus payments. And the first one, as Steve mentioned, was back in the spring. That was $1,200 per taxpayer and $500 for a qualifying child. And just recently, very end of December, beginning of January, they did a second one, which is $600 per taxpayer and $600 for a qualifying child. Some things to know about these, that the vast majority of people in the US qualified to get a stimulus payment. Also, the credit gets reduced and eventually goes away at higher income levels. Another thing to think about is that qualifying children have to be under 17 years of age. And an important thing also is that these payments don't have to be treated as taxable income. So you're not going to take a tax hit on that. If you want to check the status of whether you got these, you can go to an IRS website called Get My Payment. You can log on there. It'll show you when it was received, if it went to a bank account, will have the last 4 digits. That way you can know if the money was sent out. But now let's get back to these economic impact payments being advance payments for a credit. There was a new credit created on the 2020 tax return. I think it's on line 30. It's a new line on the form. If you didn't get an economic impact payment that you were eligible for, you can claim it on your 2020 tax return as a recovery rebate credit. So if you should have got it, you didn't, it's not too late. On your tax return, make sure you pay attention to the recovery rebate credit. I think it's at line 30. Now, when you go to the instructions of the form, or say you're using a product software to figure this out, one thing you're going to need to know is you're going to need to know if you got some of the stimulus money, or or none of it. You have to put that in. Earlier on, Karen mentioned forms 1444. So when the stimulus payments were sent out, the IRS sent a letter, form 1444, telling you, hey, this is what you got. The thing is, they were sent around the time that you got the payment. So unlike your W-2 that comes right about now during tax filing season, you could have gotten that first one way back in April. You could have got it back in August, right? So if you've got those forms, it said in the small type, keep it. All right, great, you've got the forms. But if you don't, you're going to need to get those amounts of what you had been paid if you didn't get everything. You can also do that by going to the irs.gov/account site. You can set up an IRS account, and they're going to have in the coming weeks where you can go in and see how much you were paid for that. So that information is available there. Also, you can go on to the IRS website if you have set up an account, and you can get a 2020 account transcript that will show you what payments for the stimulus was made to you. Again, that's important if you're going to be trying to claim this money as a recovery rebate credit, because the way all the formulas work out in the sheets is you have to know how much you're supposed to get, what they paid you, and what's left over. So it's important information. The gist of it is, if you're going to get some of that stimulus money, but it didn't come through, you didn't actually get it in your bank account, you didn't get that check, look at the recovery rebate credit on the 2020 tax return. Okay, so I think I'm going to turn this over to Karen for the next tip.
Oh, Karen, you're muted.
Whoops, you think by this point I know to unmute myself before talking. So tip 3 is the other dependents credit. A lot of people know about the child tax credit and taking that credit for children that you live with and take care of. But there's also the other dependents credit. So if you have dependents who don't qualify for the child tax credit, you may be able to claim an other dependents credit. The maximum credit amount is $500 for each qualifying dependent, and possible qualifying dependents include dependents who are age 17 and older, dependents who have individual taxpayer identification numbers, dependent parents or other qualifying relatives who you support, and dependents who aren't related to you but do live with you. You can claim this credit if you claim the person as a dependent on your return. You are not able to use the dependent to claim the child tax credit or additional child tax credit, and the dependent is a U.S. citizen, national, or resident alien. The credit does begin to phase out as your income goes up. If your income is more than $200,000, it does begin to phase out, and then it phases out for married couples with a joint return at $400,000. And then, Tom, let's do with tax credits as we move into tax tip 4.
All right, thank you. So tip number 4, you can use either your 2019 or your 2020 income to qualify for a couple of 2020 credits. So what are we talking about for these credits? Let's look at 2 popular tax credits that this applies to. The earned income credit helps low to moderate income workers and families get a tax break. This credit requires you to have earned income, and the credit increases as your income goes up to a point, and then starts lower again and eventually phases out. So this credit, this is an important concept. As your income goes up, you get more and more of the credit, more of the credit, more of the credit, and then you start to plateau, and then you start getting less and less and less, and it goes away. That's why it's important whether you could use 2019 or 2020 income to calculate that. We'll talk about that in a second. There's also the additional child tax credit. That's a credit you may get if your child tax credit is greater than the total amount of income taxes you owe. This credit requires you to have earned income at least $2,500. So here's the important part. If your earned income was higher in 2019 than in 2020, you can choose that 2019 amount to figure your earned income credit and your additional child tax credit for 2020. So let's go back. So say you took a big hit on income in 2020, right? And your income went way down, and now you put in the numbers for this, especially the earned income credit. You put in, well, now you're making this much this year, but you're not going to get that much credit, because remember, the more you make for the earned income credit, the more it goes up to a point, right? So maybe you're down here. They're going to give you the option. The government knows it was a rough year, so you can look back to 2019, and you can use that income just for calculating these tax credits if you want. What that means is you may get more money if you use your 2019 income to calculate these credits. So, a good thing to do is kind of look at both numbers. I'd calculate them both to see which one gives you more. Use it. It's a temporary deal just for this year, but it's important to be aware of this, because you could be leaving dollars on the table if you don't at least know about this and look at both ways to calculate it. So there is also a tool the IRS has that I wanted to mention that can help you see if you qualify for the earned income credit. It's called the Earned Income Tax Credit Assistant. It's at https://app.irs.gov/app/EITC. Maybe if you typed in Google IRS and the words Earned Income Tax Credit Assistant, it'll probably come up. So that's the way you can go in there. You can kind of play around with it and see if you qualify. But just be aware when you're having your taxes done that you have a choice about which 2019 or 20 income you use just to calculate these credits, and it could make a significant difference on how much you get.
Alrighty, thank you, Tom. Thank you, Karen. Now that we've gotten through the info on the tax credits, let's turn over our next tip to talk about getting help, where people might be able to get help, sometimes free help in preparing tax returns. Karen, let's start with the free stuff.
Right. So tip number 5 is free tax preparation. This stuff can get complicated, especially as you're exploring differences in your income and possible changes, again, especially related to the pandemic. The IRS actually sponsors 2 programs that do free basic tax return preparation for qualified individuals. The first program is VITA, or the Volunteer Income Tax Assistance Program. VITA offers free tax help to households that make $57,000 or less, people with disabilities, and limited English-speaking taxpayers. You can Google the VITA clinics often, or in most communities, you can call 211, and they can connect you to the VITA programs in your area and help you learn how to schedule an appointment. Those programs tend to be very well trained. They have a great army of volunteers waiting to help you with your taxes. The second free option is the Tax Counseling for the Elderly, or TCE program. And as it indicates, this is a program especially for senior citizens, those who are 60 years of age and older. And one great thing about this program that makes it a little special and great for senior citizens is it does specialize in those specific questions about pensions and retirement related issues, because pensions and all those kind of things, 403B distributions, can really complicate taxes about when things are taxable or not. Most of these sites are operated by the AARP, and so we will provide a link to the AARP site to help you find a TCE site near you. Or you can call the AARP's number at 888-227-7669 to see if there is a site near you. Now, these clinics do focus on doing tax returns for free. The low-income taxpayer clinic at Legal Aid, we don't do tax preparation. Our focus and our funding does something different. It does those controversies when you're having an issue with the IRS. So if you need assistance with your tax preparation, we want you to call VITA and call the AARP and TCE don't call us. Hopefully when they do your returns, they'll get it right and you won't need us, but they're the ones who do the return prep. And you can also call the IRS directly, and they can connect you with an area VITA or TCE site. And the IRS phone number for that is 1-800-906-9887. All right, Tom, I think they're ready for the next tip.
All right, thank you, Karen. So tip number 6, so you're self-preparing, you're doing your own return. Use the IRS's online interactive tool. And I really like this tool. The IRS's interactive tax assistant can provide a lot of guidance on filing correctly. It's at www.irs.gov/help/ITA. And something that should be noted, this is where you put in information and it tells you, do I have to file? Does my child qualify for the child tax credit? What's my Social Security tax bill? There's lots and lots of topics where you put in information that's specific to your situation and it gives you the answer. A lot of times it's easier than going into the Form 1040 instructions, going through all that, trying to figure it out, apply it, do those worksheets. It's an interactive tool. It's really easy to use. And one thing I should mention is that even though you're putting in information to give you kind of an individualized answer, it does not share, store, or use that data in any way. So it's not like you're putting information there and playing around and IRS is going to log that and it's going to cause you trouble. It's not going to be sold. It's just a nice tool to put information in. It leads you question by question to find out how you should treat a tax item, where you qualify for something. And it's something I recommend using if you're doing your return. You're like, gosh, does my kid qualify for child tax credit? What about that other dependent credit? You can go into this interactive assistant and get those answers. So, if you have a question like that, jump online, use the tool. It's there. It's very easy to use, and I highly recommend it. All right, back to you, Karen.
All right. Well, on to tip number 7, paying for tax preparation help. Now, there's going to be situations where you're not eligible for VITA or you have a complicated tax situation that VITA isn't trained to do. And you might then, at that point, need to look at hiring a paid tax preparer. So I want to give you a little bit of advice on how to proceed with that. First, we recommend that you research the tax preparer. And what we have here on the screen is the IRS Directory of Federal Tax Return Preparer. Contains a lot of details about tax preparers. And so that is a good place to look to make sure that they're credentialed with the IRS, and it will show their credentials and their qualifications so that you can properly make sure they're someone who actually knows how to do taxes and not just someone who set up a table on the corner and is trying to make a buck. You can also check with your local Better Business Bureau to see if there have been any complaints or concerns about the tax preparer you're looking to use. You should always make sure you ask about service fees. You should avoid preparers who base their fees on a percentage of the refund or who boast bigger refunds than their competition. Unfortunately, it gives them a little bit of incentive to make sure you get a bigger tax refund, which may sound like a good thing, but in reality, sometimes they're going to take deductions or rebates or things that you're not really eligible for that's going to cause you problems down the road. You should never, ever sign a blank return. You should only sign the completed return, and you should take a moment to read that return and make sure it's all accurate. You should make sure you ask questions about anything unclear, especially if you think it's not quite right. You should also check very closly as the bank account routing information. Unfortunately, some tax preparers just get it wrong. And if the bank account information is wrong, it's not going to route into your bank account. It's going to go to somebody else's bank account, and then it's going to be about impossible for you to get it. So be very careful to make sure that routing information is for your bank and that it is correct. You should also make sure the preparer signs and includes the preparer tax identification number on the return. All paid tax preparers are required to have that number, that PTIN number. That helps the IRS keep track of what's going on and can help us find them later if we have questions or concerns. All right, Tom, let's go to tip number 8, which is something else to watch out for if you're paying for tax preparation help.
All right, thanks, Karen. So tip number 8, avoid tax preparation and collection scams. There are a lot of bad actors out there. And generally, they're going to try to either get your money or get your information, but it's not for a good purpose. And a lot of them sound really convincing when they contact you. So I want to give you some tips that if you get a contact, you kind of know what the IRS does and they don't do. That'll help you prevent from getting scammed by these guys. So it's important to note that the IRS does not demand that you use a specific payment method, like a debit card or a wire transfer or a gift card. The IRS doesn't tell you, you have to pay this way. The IRS does not ask for debit or credit card numbers over the phone. They're not going to call you up and say, hey, give me your credit card number, give me your debit card number. It's not going to happen. That's a scammer. The IRS does not demand immediate tax payment. The IRS is really good if you owe them money about working things out, give me a time frame. A lot of the scammers, what they try to do is call you up, get the pressure on, hey, you got to do this now, you got to do this now, and then trick you into giving you some information so they can steal something out of your bank account, run some credit card numbers, things like that. So be aware that the IRS doesn't demand that immediate payment. Also, the IRS doesn't threaten to bring in immigration officers or other law enforcement to arrest people for not paying. This is a real common scam. The past month, I've been getting people calling me where they get a phone call and they're threatened to be sent to jail because of some alleged tax debt. Those are scammers. They're trying to get someone nervous, get them scared. Maybe someone has a past history of some probation issues, whatever. They're worried about going to jail. So under that stressful environment, the scammer is trying to then get you to give some information, like your bank account number, your debit card number, your credit card information, maybe some other information, right? IRS is not going to threaten you that way. Someone calls you up like that, it's a scammer. Also, similar, the IRS doesn't threaten to revoke a license or your immigration status. Like with immigrants, one thing, they'll get calls up and someone say, hey, you're going to lose your status, unless you deal with this tax problem right now. Hey, why don't you deal with it now, or you're going to have to leave the U.S., you're going to be deported. Again, they're trying to put the pressure on, they want something immediate. The IRS does not threaten to revoke a license or immigration status. That's a scammer. The IRS does not use email, text messages, or social media to discuss tax debts or refunds with taxpayers. So you're getting emails, text messages. I've seen these, people sometimes call me and say, is this real? No, it's not. The IRS is not going to text you and say, hey, respond to me now and pay this money or send me this information. They're not going to email you. They're not going to do that at all. In fact, usually what the IRS does is send a letter. Like 99% of the time, you're going to get a letter first from the IRS. The IRS does not call about an unexpected refund or economic impact payment. If you get a call out of the blue, hey, this is the IRS, you got a big refund we want to tell you about, alarm should go off. That's a scammer trying to get you, if they're not trying to get you nervous or worried like the other ones, now they're trying to get you to think, oh, I got some money. Okay, get you excited, get you talking, get some information, try to scam you. IRS doesn't do that. They don't call about unexpected refunds or economic impact payments. So what do you do? What do you do if you get a phone call from someone claiming to be the IRS? They're asking you for personal financial information, trying to get you engaged in a conversation. You know what? Just hang up. You think about it that way. They don't have any power over you right then. They're on the phone. Sounds like a scam. There's a big downside if you give them information. Just hang up that phone. You can always just call the IRS back. If you think it's real, you can call IRS back and talk to an agent at their number. So you're talking to the IRS. The IRS number, it's 1-800-829-1040. You can call them up. Something not to do, don't respond to emails, text messages, social media contacts asking for personal information for claiming to be from the IRS. And don't click any of those links. A lot of times, they might be trying to get you to give a credit card information or debit information, but sometimes they're trying to get your personal information. They're going to file a fake return in your name. Don't give them the information. If they don't have that, they can't do it. And something else you should do, is confirm any income tax debts that someone says are owed. Like if you think something's owed, right? You get a call, you get a text. Don't get involved with the scammers, but you're wondering in the back of your mind, do I really owe that? You can go online to an irs.gov accounts page. IRS set up an account, and you can actually check your tax account transcripts. They'll show you if there's any money owed or not. Or again, you can call the IRS, 1-800-829-1040. It's just important to remember that, the IRS, like we talked about, doesn't do those things, the threats, the demanding you pay now, say you're going to lose your license, revoke your immigration status, sending you emails, text messages. That's not the IRS. Those are scammers. Be aware of it. There's an awful lot of it out there right now. So it should be on your mind, not just, this time of year, all time of year, but this time of year in particular, because they're really active.
All righty, thank you, Tom. And that's a really good point, everybody. If somebody calls you or reaches out to you about this, that, or the other, about your taxes, remember, you're still in control there. And the worst case scenario is you hang up, you end that contact, and you reach out to the IRS yourself. So like Tom said, you're going to know who you're talking to at that point. So Tom, as we move on to tip number 9, let's stay with you, and let's move on to a different topic. Let's talk about what to do if you don't have enough money to pay your tax bill.
All right, thanks, Steve. So tip number 9, can't pay your tax debt? So here's some options. Well, the first one's not technically an option, I suppose, but I want to make sure everyone's aware of this. A term to understand. Collection Statute Expiration Date. Rated CSED. And us tax folks, we call it CSEDs, but it's Collection Statute Expiration Date. This is basically a deadline date the IRS has to collect a tax debt from you. It's a time frame where the IRS has to get the money from you if you really owe the money. It's generally 10 years from the date when the IRS assessed a tax. It can be extended in certain circumstances, but generally it's 10 years. This is an important thing. When the CSED passes, the IRS cannot legally collect from you. They can't enforce their collection anymore, and the debt essentially goes away. That's not like most debts, right? You owe most debts and they can keep collecting like almost forever. But with federal tax debt, I'll tell you, that tax debt has a collection statute expiration date in the computer system at the IRS. And on that date, it gets passed, IRS can't collect from you, they write it down to 0, and you're not gonna be hearing from them anymore. So, sometimes, you'll owe some money, but it's just before that date's gonna hit. It's way back when. Maybe it's from your 2010 tax year, 2009, 2008, right? Well, if it's you get some letters, you might owe this. That's important to remember. If it's older debt, it might just go away in the next few months. So just be aware of that. So occasionally, if it's near the end of that date, you can let it ride. Date goes away, you're gonna be all right. But generally, usually, it's better to deal with tax debt than ignore it. That helps prevent, the threat of like levies on your bank account, wage garnishments, things like that. So usually you don't want to ignore it. If you owe money and you want to deal with it, here's a few IRS programs that could give you some control over that. One thing is they're called installment agreements, repayment plans. That's where you work out with the IRS. You send them some money every month. As long as you keep the honor of the plan, they're not going to go after your bank account. They're not going to go after your wages. They're not going to take your state tax return refund. They will still keep your federal refunds, but it gives you some protection, and you're working things out with the IRS. It's something where you can apply online. You can type in IRS installment agreements. That'll take you to it. But there's a site, www.irs.gov/payments/ online-payment-agreement-application. So you can go online. IRS has a form. It's pretty quick, pretty easy, and you get an answer right then and there. You can also call the IRS and ask them to get a repayment plan. You can call 800-829-1040. That's 1-800-829-1040. Or, you can go on to the internet, and there's an IRS form called Form 9465. That's where you can just fill out the form. It has a couple of basic formulas in it, and has it put in a dollar amount, and you can actually send that to the IRS. They'll look at it and tell you yes or no. But it's just a repayment plan. That's my experience. It's other than if you can have all the money to pay now, it's usually what the IRS wants is to get in some type of repayment plan. There's also something called a partial pay installment agreement. It's a type of repayment plan, but this is one with IRS that allows you to pay off just a portion of the total debt monthly until those collection statute expiration dates are reached. But this is going to require providing some financial information to the IRS. A lot of repayment plans, you have to give how much you make, what your expenses are, things like that. With a partial pay installment agreement, what's happening is, say you owe a lot of money, you're just going to pay them a little bit every month. Well, that CSAD, that expiration date, that debt is still going to go away. So if you're not paying enough monthly to get everything paid off by the time that date comes when the debt they can't collect anymore, then the IRS is going to want information. You pay the smaller amount, and you kind of run it to that expiration date, and boom, once you hit the expiration date, now the debt goes away again. The benefit, again, about being on installment agreement is it means you're on a plan with the IRS. They're not going to be coming after your bank account. They're not going to be coming after your wages. That's why it's important to try and do something and not just ignore it, because you are at risk if you don't. Let's say you don't have the money, though. Right? Installment agreements for payment plans, that's great, right? But what if you don't have the money to even do that? Again, it was a hard year. 2020 is a hard year. A lot of people are having hard times right now, and maybe you just don't have the money to make installment agreements. There's something called currently not collectible status. If the IRS agrees that you cannot afford to both pay your taxes and pay reasonable living expenses at the same time, the IRS may place your account in this currently not collectible status. It usually requires providing financial information to the IRS, though. It's basically the IRS and their system throwing a switch, hitting a button, saying, this taxpayer doesn't have enough income with your expenses. They don't have enough to pay their tax debt and get by all your normal living expenses. You have to provide information to the IRS, but if they put you into the status, it gives you some protection, right? Now that you're in that status, they're not going to go after your bank account. They're not going to go after your wages. They're not going to take your state tax refund. This will keep the federal refunds, but you have some protection against those other things. The difference between this and a repayment plan is that you're not paying anything. Now, currently not collectible status, they can unflip that switch at some point if they want. So if you come in some money, you get a better job, they see you're making a lot more down the road, maybe you hit the lottery, you're in the paper, boom, they're gonna hit that switch and maybe start collecting again. Now you're gonna go back to what else do I do? Well, they're probably gonna want to put you into a repayment plan if you can't pay it all. But if it's hard times, you just don't have the money, currently not collectible status is something to consider. It's relatively straightforward, not particularly hard to get compared to a lot of the different programs that are out there. It's something that you should be aware of. Something else that I wanted to talk about is called an offer in compromise. An offer in compromise allows you to pay less than the full amount you owe. It's much more involved than installment agreements and this currently not collectible status. You got to provide financial information to the IRS, and it's actually like filling out a bank app for a big loan. You have to, explain where's your money come from, where are your expenses, lots of what are your assets, what are they worth, what could you sell them for if you have to sell them quickly. Always in this big form. You have to send it to the IRS. They look at it, and if they agree, they'll take pennies on the dollar, whatever you offer. And if they agree, what you pay them, they'll consider it as payment in full. It's just like cutting a deal. It's like saying, hey, I owe all this money. Here's all of my financial information. You know what's going on. I don't have the money to pay, but I'm willing to offer you this much to cover this much tax debt. If they go for it, great. It'll be considered paid in full. And it's another way you can tackle things. But it is more involved. It's advisable that you work with a tax professional for that if you try to explore that route. But I wanted to mention it because it is a viable option. I mean, maybe you're not near the end where that debt's going to go away right away. Maybe you got some years left on it. It's a lot of money. You're sweating it. You want to do something with it. Well, you could get on an installment agreement. You could get on the current not collectible status. And if you want to, you could still try for the offer and compromise. And maybe they go for that. These are the main ones. When people owe money to the IRS, there are other ones. There's lots of different ways you can tackle it, special programs. But these are the main ones that I wanted to mention because they're the ones that most frequently that I help folks with, and people I know that have to do with the IRS usually take these routes.
And hey, Tom, if you don't mind, just before we move on to the next tip, the last tip, you just reminded me of something. A few years ago, everybody, I had made an honest mistake in reporting my taxes. And when it got to the next year, I ended up owing. And I owed a lot more than I was able to pay right out of my bank account at the moment. Now, I was scared to death, and I envisioned all those ideas about people in the dark suits coming and telling me I got to pay up right away and all that, all those bad ideas we have about the IRS. And I ended up applying for a partial payment installment agreement, and without any trouble, I was lucky because I was working at the time. I was able to get on a monthly plan and just pay it all right back, little by little by little by little by little. And over time, it went away and it was all good. So I went from being super scared about making a kind of dumb mistake to just being able to say, okay, I'll get in touch, I'll read this letter, I'll follow the instructions, and little by little, I'll knock it out. So it worked out really well. That's all I wanted to say.
Well, that's good to hear. You know, one of the things that I come across a lot is people have trepidation about the IRS. And, you know, in some areas, it's complicated, right? It can be very complicated. But how I look at it is IRS employees are public servants. And the ones I deal with, they take their jobs very seriously, and they're trying to get to the right answer. And there are an awful lot of safeguards and procedures put in to protect people. So, you know, it's not like dealing with some private collection agency that's just going to be calling you all the time, sending you letters. There are a lot of procedures, maybe more than any other federal agency. I mean, there's a lot. They have all these procedures put in place to protect taxpayers, get to the right answer, be fair and just. And most of the time, you're going to find, you know, if you go online, it's online. But even when you talk to them, most of the time, it's not going to be that bad. They're really good to work with, actually. You know, once in a while, you have a bad egg, right? It's like anything. But it's a mistake to be really worried, really scared, not do anything. That's something you want to do. So, kudos to you for doing that, because, it's better to address it and, get it something worked out or get it behind you and then go on with life, all the other things you got to do,
Yeah. Thanks, Tom. So let's wrap things up. We'll stay with you and we will move along to tip number 10.
So tip number 10. Update your W-4. So a W-4 is a form. Its purpose is to tell your employer how much money to withhold from your paycheck for taxes. Like if you work for an employer, you get your paycheck, and you got how much money you made, there's all these things taken out, right? Some of that is being withheld for taxes. And how they know what to withhold is from W-4. If you've had big life changes, like getting a second job, having a baby, getting married or divorced, you might want to adjust your withholding by completing a new W-4 form for your employer. Now, why? Why do you want to do this? Well, when your withholdings of each paycheck are aligned to your financial situation, you're less likely to over or under withhold over the course of a year. So what that means is if every paycheck they're not taking out enough, well, tax time comes around, you could have a big tax bill, a small refund, or even a big tax bill, like an unpleasant surprise, right? Or maybe you're having too much held out. You're over withholding, right? They're taking way too much out of every paycheck. Well, okay, you might get a big refund, but maybe it's better to have that money in your pocket every paycheck instead of over withholding, right? Well, W-4 is how you can adjust that. Now, over a year ago, the IRS changed its form W-4 to make it more accurate for estimating withholdings. They changed it around. The new form is supposed to be easier to use, and the IRS hopes that it'll be easier for employees and employers to understand. The new form is supposed to make all the calculations more accurate. In the old form, the biggest thing people know about is something called withholding allowances. That's where when you had a W-4, you could put in more allowances. Like say you have a couple kids, you could put them in, more allowances. They had different rules, right? The more allowances you put in on the old form, the less money they would hold out from your pay. All right, so some people would use that to kind of push it up or down. Well, those are gone. There aren't withholding allowances anymore. But with the new form, you put in a lot more data. It takes in consideration of your filing status, credits you might be getting. If you want to have extra money withheld, that's what you want. With the new form, there's a line you can kind of put a dollar amount. So you can still do it, but if you've used withholding allowances in the past, those are gone. And again, really, you want to be thinking about this if you had a big life change. And again, crazy year, 2020, crazy year. A lot of things happen, right? If you're working a second job, new kid, married, divorced, whatever, it's worth just looking at this. So when we get through, this is going forward, so we go through 2021, we get around a year from now, you don't have a surprise that you don't want. So just another tip, think about looking at it. You can ask your employer's payroll or human resources department how to submit a Form W-4 if you want, because every company has to have those for their employees, and they should be able to help you if you have more particularized questions. So,
all right, thank you, Tom. And that gets us through tips 1 through 10. We still have some time for questions as we wrap things up, and Kit may want to come on back in here. While we make this transition, I do want to note again that we're going to make available all the links that we talked about tonight, and you saw some shots of some of those web pages and IRS resources in our slides. So don't worry, you might be able to find them by Googling, but you can get them through our social media and through our websites, or just contacting us. And real quick too, we also mentioned a couple of phone numbers. I'm going to reread 3 of them now. As for and 2 of these have to do with those free tax programs that you might be eligible for that Karen talked about a few minutes ago. So the first one was VITA, Volunteer Income Tax Assistance. Just call 211, the local information line, and ask them for where to go for your nearby VITA program. Tax counseling for the elderly, what we call TCE, that's run through the AARP to get into alphabet soup. But the bottom line here is you can call the AARP at 888-227-7669. And then last, we talked a bunch about just calling the IRS, and you can do that at 1-800-829-1040, 829-1040. So now, Mr. Kipp, any questions come in when we were talking?
We didn't get any questions while we were talking, so we don't have anything else. I was going to ask real quick, if you don't mind, is this a fairly unique tax year because of COVID and the extra checks and everything?
Yes.
Yeah.
Of course, there's lots of life changes people have had, right? Lots of things going on. That's one complication. And then one of the big things I'm seeing is the stimulus money, right? There's all these different programs. Stimulus money can be a whole variety of things. There's loans, all sorts of stuff. But the big one I see is that, to help the economy, help people, the government found a way to blast a lot of money out to us early, right? So it was done very quickly. There was a good reason for that, but there, could be maybe unintended consequences, things I didn't think about. And so getting it out so fast, it's like where the money went, what if I didn't get it, got part of it. Those types of things are a bit complicating. And so, you put all that together, plus the additional stress everyone has. It's interesting times. But, we're all going to get through it. It's going to be all right. There's people out there to help. These free tax preparation services, the online information. The IRS is very good about putting information online. And sometimes it's almost overwhelming. It's almost too much, right? But if you come across a weird question, there's usually a good resource to find it. But it's going to be a busy year, to get through it. But it's going to be all right.
All righty. Well, since we don't have any questions sitting here for us, I just want to thank my coworkers, Karen and Tom, and thank everybody else for watching tonight. And on behalf of Legal Aid, the library, and the Hispanic Center, we wish you all really good luck just with your taxes this year. And we wish you and yours good luck and good health going forward into 2021.
Well, thank you so much. Thank you so much for the presentation tonight. And I'll just say real quick to check out more Kent District Library programs at kdl.org/events. And we do archive as many of these programs as we can. And this is one that we will have up there so you can rewatch it whenever you want on KDL's Facebook or YouTube pages. Thank you again.